till the Fed's interest rate decision later on today, as fears of a banking crisis echo through the markets. In this report, we aim to present the recent fundamental and economic news releases that impacted the US stock markets. Look ahead at the upcoming events that could affect their performance. All three major US stock market indices, namely the S&P 500, the Dow Jones 30 and the Nasdaq 100, recorded a slight decline since last week. The release of the preliminary US GDP rate for Q1 was indicative of a slowdown in US economic growth, as the impact of high interest rates are evidently becoming more visible in financial data releases. On the other hand, with the earnings season in full swing, we highlight the positive earnings releases by high-profile companies such as Meta, Boeing, eBay, ExxonMobil, and Ford in the past week, which have aided to restoring consumer confidence and boosting traders' optimism in the markets, as the economic downturn from high interest rates has yet to be seen in equities. Despite the persistent inflationary pressures, firms, on some occasions, were able to outperform the predictions made by analysts by posting stronger results in addition to providing optimistic economic forecasts for future business revenue. On the other hand, US regional banks have been pummeled following weaker than expected earnings releases, combined with the crash of First Republic Bank, have further heightened fears of a continued banking crisis, which could in theory spiral into widespread panic in the equities market, as fears of a recession loom. The murky waters surrounding First Republic were known beforehand, yet the surprise release that the bank has experienced 100 billion in withdrawals from deposits stoke fear in equity traders, despite multiple reassurance by policymakers that the banking system is sound and resilient. The reality appears to be that financial stress has yet to subside, even as JP Morgan has once again come to the rescue by acquiring yet another failed bank. The aforementioned events have facilitated an increase in volatility in the equities market and as a result have pushed markets lower since last week, as traders await the Fed's interest rate decision that is due today. Currently, the Fed funds futures assign an 86% probability for 25 basis point hike scenario to materialize, as such as traders may be placing heavier emphasis on the forward guidance releases by the Fed, where depending on the nature of the wording used, may provide equity traders with hints as to how the FOMC might proceed in the future. Moreover, Fed Chair Powell's speech following the decision could further provide insight into the inner workings behind the Fed's decision, and as such, should any dovish sentiment be detected, we may see the equity markets gaining and vice versa. Lastly, we note that another market-moving event is expected on Friday, namely the US employment report, and based on the recent announcement by firms such as Walmart, Meta, Walt Disney, and many others who reduced their employees' headcount, and may be shown in the NFP figure. Thank you for watching.